Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. Today, we're going to talk to you about a dividend stock that has been beaten down. Its yield is almost 5%. It had a pretty strong earnings release, though. So the question is, everybody, is this the best time to buy this stock before it pops?
Well, let's smash that subscribe button. Let's give this video a thumbs up so we can find out if this is a stock too cheap to ignore and to catch it now before the stock price pops.
Hmm. That's right. So what we're going to do today, we're going to review this company's earnings release from the last week. What's prompting this video? What's prompting the possible positive sentiment for the stock? Then we're going to run them through the Dividend Diplomat stock screen, which has those three metrics and that bonus metric. The dividend payout ratio is the second metric. The first metric is the earnings ratio. The third metric is the history of increasing dividends. Then there's that bonus metric, the dividend yield. I threw you guys for a curveball right there, didn't I?
Bert the Hurt, making us keeping us on our toes.
Yeah,
Twinkle,
I
twinkle, twinkle,
definitely
twinkle.
didn't skip the first metric. I was trying to get you guys keep you happen.
Guys, we are recording this on a Sunday night, almost 10 o'clock here on October 27th, guys. So stock prices will be as of October 25th, close of day here. I mean, this is a stock. It's over 100 billion in market cap. Very few players in the space. And there are fears that a certain big Mag 7 stock is just going to kick this and possibly other stocks in this industry away. And if it does, I'm screwed. No, I'm kidding. I do own over 100 shares of this
Yeah,
stock. And Bert, I know you and your wife also own this stock.
not 100 shares, but we own a pretty substantial amount, probably in the 50s, I think it is. Whatever the number is, we're going to evaluate UPS today, ticker symbol UPS. So they've been beaten down over the last year. Why? Costs are soaring. They had a terrible union contract the last go around that caused their employment costs to go sky high, beating down the company's earnings, beating down the analyst sentiment for the stock. That's why a lot of people have been able to buy UPS around a 5% dividend yield. But this last week, they released earnings, and there were some positive signs in there that made you think, they made you wonder, is it turning around for UPS? Are things getting better? Are they going to pop sometime here in the near future?
yeah, I mean, they had a beat on revenue, a beat on non-GAAP EPS. Revenue is actually up 5.4% year over year, to the tune of about 22 bill. They were also up, in their U.S. domestic segment, which kind of surprised me a little bit.
Mhm. Yeah, and the interesting thing with that too, it was the increase is driven by the increased volume. So you're getting a lot of activity back into UPS. Their international segment was up 3.4% too, driven by higher revenue per piece. So in the US, they're getting a lot more volume driving revenue increase. Internationally, they're able to raise those prices. All in all, that's how you get a 5.4% total revenue increase year over
Yeah,
year.
I'm sure, UPS. I know that I think they had some layoffs. I'm sure they had some nice cost cutting that's happening and will happen in the foreseeable future. But that pushed consolidated profit up 47%, to 2 billion. Margin was up 8.9% versus 8.5% what they were expecting. Non-GAAP EPS was $1.76, above $1.67 as the consensus, and it was $1.57 a year ago. So that's a nice 19-cent jump. And it looks like they're really getting close to that 100 billion revenue mark.
Yeah, so they beat on the top line, they beat in the middle with the margin, and then they beat here on the bottom line with the non-GAAP EPS. That's why we are so pumped up. That's why we are so excited for UPS to see, is this the time to catch it? Because the market hasn't really overreacted to this earnings release yet. It was trading before the earnings, it was in the high 120s, low 130s. Now UPS is only up to $137.34. So you really haven't seen too much of the good news baked into the stock price yet.
Yeah, or is the good news actually bad news? Or is Finkel is Einhorn, Einhorn is Finkel? We
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 run them.
don't.
Yeah, should we run them through the screener and find out?
Let's run them through the gosh darn Dividend Diplomat stock screener, guys. We're going to find out if this stock is truly undervalued or not, or if there are some concerns lurking within that dividend metric or two.
All right, so that price is 137.34. Forward earnings from Seeking Alpha are $7.48. That's a PE ratio
Hmm.
of 1836.
Pretty aggressive there on the EPS.
Yeah,
Uh, you
yeah,
know, yeah, yeah. Now 18 or say 18 PE dividend payout ratio though is looking really high, really concerning at 87% right now, Bert.
yeah. That's the piece of it. Their 5-year dividend growth rate is 11.43%, and they've increased that dividend for 14 years. So they are over halfway to becoming that dividend aristocrat.
Oh, yeah. The yield is now, as Bert indicated, 4.75%, so well above that S&P 500 yield of about 1.3 to 1.6%, above that SCHD yield, above the VYM yield. So you're getting 4.75 right now. Are you getting paid to wait is the question.
Well, it's well above that 5-year average. So yeah, that definitely helps. Year to date, they are down 13%. The last year, they're only up 1.93%. In the last 5 years, they're only up 18.78%. So that's
Yeah.
UPS. We'll put the metrics up here. Overall, still waiting to buy, not running in there yet. Sure, this was a great quarter. They beat on the top line, they beat on that adjusted bottom line. That payout ratio is still a little scary though at 87%. You still want to see it move closer to 60% than hang closer to 100%.
Yeah, it's interesting because usually when you adjust earnings, that means your earnings per share is going to go up. They reported $1.80 in diluted earnings per share. So adjusted, it actually, went down 4 cents to compare it comparably to the prior period. So to me, that also speaks to like the honesty that they're not trying to
Mm.
squeak more out. They earned more than they're adjusted. So just keep that in mind.
Yeah, that's a good point too. And I do think it's interesting though. It's sure the payout ratio is high, but there are those positive signs and there are those positive indicators built into all of this. So that's why we're really here today. If revenue were down, if margin were shrinking, there'd be no chance we'd even entertain the idea that UPS is a stock to buy right now. But the positive sentiment is there, Lanny. And I think that's what is so fascinating about UPS today.
Yeah, I think we're really going to have to keep an eye on UPS stock, guys. Again, I own it. They're up a couple percent in the last month, up 2.5% this past week. 117 billion in market cap. I own a lot. I'm not adding to it right now, guys. For everybody out there, I'm letting the drip happen at this price, which I'd like. But what are you guys doing? Are you guys buying, holding, or selling UPS stock? Let us know in the comments.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're either with us or you're against us, Jack.
That was Bert, the Heart, and Lanny from the Dividend Diplomats. Over and out.